Hi, I'm Nicholas Schneider, and this is a gas market update for the third quarter of 2016. Global LNG exports increased noticeably in the third quarter of 2016, with the startup of new LNG export trains in Australia, the United States, and Malaysia, and the return of production at the Gorgon and Angola LNG projects. In total, LNG exports have increased by approximately 15 million tons in the first 9 months of 2016 compared to the same time last year. For 2016 as a whole, LNG trade is on track to increase by between 20 to 25 million tons, or 8 to 10% compared to 2015. However, this increase in LNG trade is being matched by a similar increase in the size of the LNG fleet, which we expect to increase by between 8 and 10% by year end. As a result, short-term charter rates for LNG vessels remain relatively unchanged throughout much of 2016. However, as demonstrated by the increase in short-term charter rates in the third quarter of 2016, the availability of LNG vessels on the short-term market is becoming tighter. In fact, at the beginning of this year, there were roughly 30 vessels available on the short-term market, which has decreased to less than 20 vessels as of October 2016. After several years of the LNG fleet increasing faster than the demand for LNG vessels, we're now at a point where LNG trade is increasing faster than fleet supply. By the end of 2017, roughly 10 to 12 new LNG export trains are scheduled to come online in Australia, the United States, Malaysia, Russia, and West Africa, leading to an increase in LNG trade in 2017 of approximately 30 million tons, or 11%. In contrast, we expect the LNG fleet to increase by roughly 8% next year, leading to an increase in fleet utilization and charter rates. In the longer term, we expect this trend to continue out through the end of the decade. The current LNG order book for new vessels is approximately 31% of the existing fleet, whereas we expect LNG trade to increase by slightly more than 40% by the end of this decade. Turning our attention to LPG shipping, the most noticeable change in recent months has been the decrease in short-term charter rates for LPG vessels. Spot rates for very large gas carriers have decreased to around $11,400 per day in October 2016, and this is due to high fleet growth and a lack of arbitrage opportunities for U.S. cargoes in recent months. Rates for mid-sized gas carriers have also decreased, but remain more stable due to trading in both LPG and ammonia and a greater rate of fixed charter coverage. In fact, our joint venture LPG fleet with Exmar is already 59% booked in 2017 at roughly $24,400 per day, and more than 40% booked in 2018 at similar rates. In summary, LNG trade is now increasing faster than fleet supply, which should lead to an increase in fleet utilization next year. And in the LPG shipping market, our charter coverage in our Exmar joint venture fleet provides some stability in this period of weaker LPG shipping rates. Thanks very much for watching, and we'll be back next quarter with another update.